Simon, what are real assets and why is there interest in them?
The reason real assets has evolved as an asset class is largely, again, post-global financial crisis. People have become very concerned about the massive expansion in global money supply. We've been through the biggest expansion in money supply ever in history, and the expectation, although we appear to be in a very deflationary environment today, is that one day, in the not too distant future, we'll start to see inflation manifesting itself. And we could potentially be at an inflection point where the room for rates to come down any further to address the lack of growth in the Western world may well have reached its hit rock bottom, and the inflection point will be the turning of the interest rate cycle. And that's impacted people's view of bonds as a long-term asset class, and it is encouraging people to think about what sort of investment should I be making as an inflation hedge.
And how do you define real assets?
Real assets are tangible investments. And typically they are real estate, they are infrastructure, ports, toll roads, airports, and they are agricultural land. And agricultural land-based investments, like infrastructure and like commercial real estate, typically throw off an income. They have an income characteristic because they're operating businesses. So from a real asset, you derive part of your return from the cash yield of the business, whether it's the rent roll on your portfolio of properties, your REIT, or whether it is your earnings from the toll road or the port, or indeed the earnings from growing and selling crops on a farm.
So clearly agriculture is close to your heart. What are the characteristics of this asset?
Agricultural land in the developing world, in the unsubsidized world of Latin America and Australia in particular, which are two vast land masses where one can grow agricultural produce in scale. Land prices haven't moved in real terms for 70 years. On an inflation-adjusted basis, there has been no real increase in the price of land. And after the financial crisis, a lot of the banks that had been lending to agricultural businesses, farmers who are typically long assets and short cash, withdrew. They either got into serious financial difficulty themselves and had balance sheet issues, or where they remained in the marketplace, they started to ask for much higher margin to equity in their loan books. And as a consequence, prices fell. Land prices fell. And this created something of a hiatus where institutional investors realized that there could be a combination of returns from the cash crop plus an uplift in capital values, both in the medium term because of this post-crisis anomaly, and also in the long term because of some very attractive tailwinds that are driving people's perception of agriculture, population growth being one of the most important, demographics in this part of the world, young populations, fast-growing populations in Southeast Asia, and of course migration into cities and changes in people's dietary habits as they become more urbanized and they consume more protein.
How important is China in this opportunity?
China has been really the primary game changer, because China in the last 5 years has gone from being a modest importer of agricultural commodities to being the largest importer of soybeans, sorghum, canola, and milk powder, and a host of other products that are grown or produced on farms. and that doesn't look as if it's going to slow down in a hurry. So there are a number of very strong reasons why I believe that agricultural investing, with a proviso that you are investing in agricultural land, could be the best investment you could make for the next decade.
So what are the considerations for investors buying agricultural assets?
Agriculture is a science, the science of agronomy, and what makes the difference between a good farm and an average farm, or a top decile farm and an average farm, can be very important for the profitability of the investment. You might make twice as much money out of a well-managed farm as you would buying an average farm. And that, of course, drives the economic decision-making when you are investing. So finding world-class agricultural operators, farmers, to run the business, professionalized industrial-scale farming, in an industry where 95% of farmland is still owned by individuals, and corporatization is only really just beginning in the world of agricultural food production.
And how can investors get access to these assets?
When I embarked upon this project a few years ago and started to look at agriculture as an investable asset class, we looked at some of the listed companies, some of the ETFs, some of the opportunities to invest into commodity-based funds. None of them really gave us what we were looking for. The way we've decided to structure our business is somewhat unique. We are offering investors the opportunity to cherry-pick from a range of farmland investments around the world in accordance with their own asset allocation and risk tolerance. There may be investors that would be very happy to invest into Australia but would not be comfortable investing into Africa or Latin America. There may be other investors who have a far higher return objective and as a consequence would be prepared to take more risk by investing into countries that will be perceived as slightly more risky. We try to give investors a broad array of choice, and for those that would like a diversified portfolio, we've constructed the Emerging Market Land Opportunities Fund, which invests according to our risk budgeting across these various opportunities around the world. So we have investments in Brazil, we have investments in Peru, we have investments in Paraguay and Uruguay, and we also have investments in New Zealand and Australia, which are, of course, bread baskets for this part of the world.